Hi everyone, thank you so much for joining us today here at our presentation online and in person. And if you're watching this later, thank you so much for watching our presentation. My name is Soka Yus and I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. I've been a financial wellness counselor for 3 years, but I've been in the personal finance industry for over 19 years, so it's definitely my passion. Today we're going to talk about the benefits of meeting with a financial wellness counselor. So meeting with me, what does that look like, meeting with me? What do you need, what kind of information do you need to meet with me? What kind of prerequisites do you have to meet with me? So we'll go over that today and some of the things that I do with you or within a group setting or during presentations. So if you have any questions online, just type in the questions and Seth will forward me the questions and we can answer that, or you can wait until the end of the presentation. So again, my name is Soka Yus. I'm a financial wellness counselor. This is my phone number and my email address. The best way to reach me is via email. So we'll have this up here and then we'll have it towards the end of the presentation as well. But if you missed it on the presentation, you can go to our website, mayocreditunion.org. And my information will be on the financial wellness site as well. Or you can just call in to, to our phone center and they can transfer you to me, or they can give you my email address as well. So on today's agenda, we're going to talk about financial assessment and goal settings, debt management strategies, budgeting and expense tracking, education on financial products and services that we have available here for all of our members, and emotional support and stress reduction, and what I do to help you get through whatever situation is you're going through. So this is basically some of the things that I do, but when I meet with people, it's not always that they are in financial dire. It's not that they need help with their finances. A lot of times people meet with me for, just use me as a sounding board, because it's hard to find, someone else to bounce off some of those financial questions and ideas off of. So we'll go ahead and get started here. So the first thing we'll do when we meet, if you come to me and you tell me that, I make this much money and I don't know where all my money is going to at the end of the month. I don't know, if I'm tracking it correctly or not. So the first things that we want to do is we want to go ahead and have an assessment. So we want to take a look at your current financial picture. Are you in the negative each month? Do you not know where your money is going? Do you have financial goals that you haven't set for yourself and where you want to go from there? And then we'll talk about how you feel about your finances as they are currently. How does that make you feel, not knowing where your money is going to? Or how does it make you feel knowing that you have complete control over all of your, every dollar that's coming in? So how do you feel about that? Because I want to go ahead and lift the stigma about talking about money and budget and how it's completely tied to our emotional health, to our mental health. So a lot of times people come to me and said, I had, an episode where, I was feeling really depressed. I was going through some stuff in my life and I just overspent, and now I'm $10,000 in credit card debt. How do I get out of this? So we'll address the emotional side of it too. If you, when we meet, how do you feel about, how did you feel when you spent the money? What kind of coping mechanisms we can look into versus having you spend the money? So things like that too. And then we'll go and gather information, such as your income and your expenses, some of the assets that you have, some of the debt that you may have, and some of the savings. So we'll gather all that information just to have it on a sheet of paper in front of us, written in black and white, just so you can see your overall bird's eye view of your current financial situation and where you want to go with that, okay? So then we'll talk about goal identification together. So if you come to me with saying that, you have a lot of credit card debt and you have a high interest rate on a loan that you got a couple years ago, how do I get out of it? So then we'll set our goal as that, whatever the situation is, how you want to get out of it, what kind of goals correlate with what your current lifestyle is now. And then we'll, anything with goal settings, we want to have a set due date on that. So we'll go over that together as well. So we'll create a short-term and long-term and medium-term goals. So your short-term goals would be something like, I want to buy a car within 6 months and I need to save $4,000 as a down payment. That would be considered a short-term goal. A medium-term goal would be, I want to buy a house in the next 5 years. What do I do with my money, how much do I need to save with each paycheck, or how much do I need to save as a down payment? How much would a closing cost might be? That kind of goal, within a few years, that's your medium-term goal. Your long-term goal would be, what does your retirement look like? How much do you want to spend on retirement? Do you want to, hop from one country to another? Or do you want to just stick around in the current state that you're at now? So we'll talk about that as well, when we meet to set your goals. We want to prioritize which goals make sense to go after first. So if you want to, buy a house in 5 years, but you currently have about $20,000 of credit card debt, our first priority would then to get you out of debt. So we'll try to figure out what kind of debt management or debt repayment program would be best for you, and how much you need to pay from each paycheck, or if you need to get a second job, things like that too. So the next thing we'll look over is your financial analysis. Once your goals are identified, I'll work with you to complete your analysis on your current financial situation and how you can reach those goals and what time frame that you need to reach them by. So we'll take a look as an overall what your money looks like right now, what you want it to look like in a few months, what you want it to look like in a few years. So that's something we'll talk, we'll talk it over. The first initial meeting usually takes a couple of hours to get through because of the details of information that we'll gather together. So before you meet with me, it's not like you need all your bill information. Just know how much your bills are each month, what your credit card balance is, the interest rate, things like that, if you have debt that we're trying to pay off. So you don't need a lot of detailed information to meet with me. It's just your regular bills, okay? And then we'll go from there. Because usually when people want to talk with me and they said that, I want to get out of this $10,000 credit card debt, but then it turns out that we need to address something prior to paying off that debt. It's usually you start out with one topic and then we explore more into how you get into the situation that you're into, and then we go into a different topic. So, we ultimately have a goal for you to pay off your debt, but if you need to meet with someone else, like a different counselor to help you figure out different coping mechanisms to not spend money and just try something else before you swipe your card, then we'll address that as well to see if I need to send you somewhere else too. So when it comes to debt management strategies, we'll go ahead and assess all of the debt that you have. So we want to gather your information on your debt. What type of debt do you hold? Is it payday loans, credit cards, mortgages, student loans, auto loans, or any other debt that you may have? So of course, being at Mayo, a lot of people have, student loans. That's really popular these days. So a lot of questions I get is, how do I pay for my student loans and credit card that I accrued towards the end of my, studies? And how do I save for retirement, or how do I pay for childcare now that, I'm a new mom? Which one do I juggle? How do I juggle all these different finances? Which one takes priority? So then we'll go over and, prioritize what your goals might be. Is your goal to be debt-free within a few years, or is your goal to make sure that you start saving up for retirement now, and then start small with retirement and then pay more on your debt, or what kind of goals you want to reach within a few years, and long-term goals too. So then we'll go ahead and prioritize which debt to pay. We, of course, want you to pay the highest interest first. So we'll talk about, high interest debt versus low interest debt, secured and unsecured debt. Which one should take priority? Which one should you pay first? How much should you pay towards each one each month? And then how much you should put towards savings as well. So debt relief, we'll talk about the difference between consumer credit counseling versus debt management. So there's a lot of information out there on debt management and consumer credit counseling. The difference is with debt management, a lot of times those people are, they're advertising as a business where you would have to pay something up front as a fee to start, and then you'll have to stop making payments on all your credit cards and all your debt. And they'll ask you to pay a certain amount into an escrow account. Once they have enough into an escrow account for them to settle on any of your debt, then they'll reach out to that creditor to offer a settlement. So that's a debt management company. They'll take a fee for their service. But another really good route to go to is consumer credit counseling. A lot of times those people are nonprofit agencies like Family Means here in Rochester. There's one up in the cities too that can help you with, with consumer credit counseling. Or Lutheran's Social Services can help you with consumer credit counseling as well. What's the difference between them and what I do? So a lot of times with consumer credit counseling, they have the ability to help negotiate the interest rate with different creditors. That's something that I can offer a service, but because I'm a service with a credit union, they usually don't lower interest rate for me. But I would be a good place to start if I need to refer you to somewhere else. A lot of times if you look up debt management, there's a lot of scams out there, so be very, very careful and do a lot of research on the company that you want to go with. So it's just to make sure that you're not getting scammed, that you're not going to be part of a fraud scheme. Just do your due diligence and the background of the debt management company you go with. There are a lot of legitimate debt management companies, but there are a lot of fraudulent companies as well, so just be careful with that. So then we can talk about debt consolidation and repayment strategies. So when you have a lot of credit card debt with different, interest rates, some are very high, some are low, is it a good time for you to get a debt consolidation loan? Are you in the right position for it? Are you in the right, mental state to get a debt consolidation loan? Because a lot of times if you haven't addressed the core issue as to why you overspend in the first place, and you end up getting a debt consolidation loan to pay off all your credit cards, so now you just have this one big loan that you're paying off with one interest rate, which is probably a lot lower than your high interest rate credit card that you're paying. But if you haven't addressed the core issue as to why you overspend in the first place, chances are that you're going to max out your credit cards again. So we want to address that and see if it is the right time for you to get a debt consolidation loan. And then if it's not a right time, then we can look into different repayment strategies. Like if you want to do, a monthly payment strategy, if you want to pay it every couple weeks and things like that. And then we'll offer you education and credit monitoring as well. So we want you to educate yourself on, personal finance, whatever your personal situation is now, whatever your goals are. We want you to educate yourself on that, and I would be able to provide you with some information to educate yourself on that. And then we want you to help monitor your credit as well. So I always refer people to go to annualcreditreport.com to take a look at your current credit score, your credit report, and then we'll assess that to see if everything is correct as well. So make a plan that will help you see a difference sooner. So some people, a lot of times when you're in debt, you feel like you're drowning by yourself. So when people come see me with debt management and with issues and with stress that they're going through with their debt, they often leave telling me, what they tell me is that they feel a lot better after meeting with me because they feel like they're not going through this journey alone. And it's not that it's a one-time meeting also. If you're, trying to get out of debt, but you don't really know where to start or where to go to, I won't just meet with you once. It can be an ongoing relationship to where we go ahead and meet every couple weeks, every payday, so we know which, bills that we're going to pay this payday, or, which debt we're going to pay off by certain months and stuff. So it's something that can be ongoing, but if it's something that you just want to meet for one-time purposes, if you want to see if you're on the right track with repaying your debt, then we can do that as well. So when it comes to debt relief, there are outside services such as Family Means that are, it's nonprofit. It's available here in Rochester and up in the cities. But we want you to be very careful when it comes to scams and everything. There's a lot of scams, a lot of fraudulent companies out there. So do a lot of research on that. And also if you are in, Florida or in Arizona, there's a lot of local services that can help you find nonprofit consumer credit counseling as well. So when it comes to debt consolidation, again, is it the right time for you to, get a debt consolidation loan? But it does, so there's some of the pros is it helps simplify your debt repayment, potentially lower your interest rate. It can combine all your debt into a single loan, and all you have to do is pay that one loan back, that one payment back, so you don't have to pay 4 or 5 different credit cards, different dates, different amount. It's a lot easier for you to know that you just have that one loan to pay back. And we do have, a lot of great loan officers that you can talk to here transfer if you find yourself that you're ready for some sort of debt consolidation loan. It's a lot easier to keep track of and potentially save you a lot of money because chances are your interest rate on a loan, debt consolidation loan is going to be a lot lower than your credit card interest rate. It's typically done through a debt consolidation loan or a balance transfer on a credit card. So if you don't think that you wanted to do a debt consolidation loan, but you've been getting offers from, let's say, Discover or Capital One, any other credit cards that have a large available credit, and they tell you that if you do a balance transfer, if you have an introductory rate of 0% for the next 18 months or 21 months, that might be something for you to look into also. If you feel that you are ready to do a balance transfer, because remember, when you do a balance transfer, you're putting your debt onto a different credit card, and by the end of that introductory term, your interest rate might go up to 27, 29%. So only do a balance transfer if you feel like you're ready and you're prepared to pay that debt off within that introductory rate. Otherwise, then you're back to paying a very high interest rate. And also make sure that you have an honest conversation with yourself to see if you are absolutely ready to pay off these debt, because now you're going to have available credits in all these other credit cards. And are you going to be tempted to overspend again? Are you going to be tempted to travel more, to use money on, to use your credit card again? And then if you're not mentally prepared to pay off your credit card, you're just going to put yourself further into debt if you end up getting a debt consolidation loan or doing a balance transfer. So the next thing we'll talk about is the types of debt repayment plans. So if you are ready to pay off your debt, but you won't qualify for a debt consolidation loan, and you don't have any offers from credit cards to do a balance transfer or have an introductory rate with a large, available credit, then we do have different types of debt repayment that we can explore together. So the first thing is the Snowball debt repayment program. You might have heard this before, where you list all of your balance, list your debt by order of balance. You list the smallest one first, so the lowest to the highest balance. You want to pay off the smallest balance first to build that momentum. It's going to be a mental game that you play with yourself, okay? So you may have 5 credit cards. The first one is $100, the next one is, $200, and then $1,000, $4,000, so on and so on. So you have 5 debt totals. So you list it by smallest one first. So we're not even looking at the interest rate at this point. We just want you to pay the smallest one first, and then you can use that money that you paid that off towards and put it towards the next debt, and pay that off as quickly as possible. So the pros with that is that you're going to build that momentum. You're going to tell yourself, I pay off this $100 credit card. That's a win for me. So now I feel better about myself to have that enough confidence to move on to the next debt. So now you pay off this next debt, which is $500. So you're building that momentum, then you're building that confidence within yourself. So then you'll be like, you know what? I got 2 out of the 5 credit cards out of the way. I only have 3 credit cards left. So I feel like I've, hit these little victories and these little wins. So it helps build your momentum, help you build your confidence. So it's a little, psychological game that you play with yourself. On the other side of it is the avalanche debt repayment. This is where you would list your debt in order of interest rate, from the highest interest rate first to the lowest. So the highest interest rate could be, excuse me one second here. It could be on a balance that's larger. It could be your largest balance is $4,000, but it's also your highest interest rate. So you would still list that. We're not even going to look at the balance. We're looking all at the interest rate. And then we'll work on paying that off first. And then once we pay that debt off, we'll go to the next highest interest rate. What that does is going to save you more money in the long run, because the higher interest rate, the faster your debt accumulates. Okay, so that's where the pros are at. The cons would be that it takes you a little bit longer to get to pay off some of your credit cards or some of your debt. So not particularly like a timeline longer, but mentally. So if you're not prepared to pay on one debt for a few months and then know that you're going to pay minimum payments on all your other debt, just remember that the momentum doesn't build as quickly as this debt snowball. So just know, just prepare yourself mentally that it might take a little bit longer to see results. The next step would be consolidation. We can help you determine determine if consolidation can help you. What is the best plan for consolidation? Is it going to be, is it best that you get a debt consolidation loan, or is it best that you refinance your home or refinance something else for you to get that extra equity out to pay off your debt? What is the right, right move for you? And of course, we'll offer education and credit monitor. Well, we don't offer credit monitor, but we offer education and help you learn how to monitor your own credit by going on annualcreditreport.com. So I provide education and guidance on responsible credit management practices and to help members avoid future debt issues. So, presentations like this that we give here on Wednesdays, Financial Wellness Wednesdays that we have available, those educations are available online for free for all of our members, or you can just go to YouTube later on and look that up. So those are kind of education information that we provide. Or when you do meet with me, I do provide more personal education depending on your personal situation. So overall, it's not really, I can have 4 meetings in one day and it's all completely different reasons for meeting with me. Most of the time people meet with me for budgeting reasons or trying to get out of debt. So I can give like an overall overview on what to do and say, but it's, if you want what's personalized for you, you would have to meet with me so we can work on what is, would be more personalized towards your current situation, your current mental health status, and your current financial status, what kind of goals that you want to reach. So it'll be more personalized towards you. So when you do meet with me, we do have a budget plan and how to use your credit cards wisely. We'll talk about that together, and we'll try to track what your history is with using credit cards. If your goal is to improve credit, your credit score, then we can work on that as well. But the thing that we always talk about is how to avoid predatory lending. Those things are, payday loans or places like Klarna or Afterpay, one of those like buy now, pay later situation. We'll talk about that and how to avoid it too, if that is what your, situation is. So then we'll talk about budgeting and expense tracking. That is the most important thing when it comes to trying to pay off your debt. So initial assessment, we want to gather I think I went backwards here. Budgeting. Okay, so we'll gather your data and your income. We'll establish your goals, and the spreadsheet will be available to you too. So we'll look over the spreadsheet here. So when it comes to budgeting on a piece of paper, we want to go ahead and make that as basic as possible because we want you to be able to follow it to the best of your ability. And of course, we'll adjust it here and there, but the goal is to have this and stick to it for a while until your goals are met. So the first section would be, list off all your income. If you have more than one income, if there's more than one, parties bringing in income in your household that you want to contribute, that you want to put on this budget spreadsheet to pay off your debt and, keep track of your expenses. So you want to create a list of all your monthly expenses. You want to compare the total expenses to your monthly income. So after all your fixed expenses and your variable expenses are added up, we want to see how much is left over out of your income. So we want to have a full list of your income, how much that is, how much your total expenses are for the month, and then what is left over. So what's left over, do we put that towards a general savings? What kind of financial goals are we looking at? How much do we put towards those financial goals? So then we'll list, your savings goals as well as part of your budget. And then, of course, my recommendation to everyone is to automate your savings. You can have your payroll directly deposit a certain amount or percentage to a different savings account that is not with your main checking account. The pros of that is that you won't be tempted to spend that money. So whatever money that you don't even see that goes to the other account, you won't be tempted to use it to buy, frivolous things. You know that it's going to be going towards your goals. Whether your goals is to save for new tires or save for a down payment on a house, whatever it is, the easiest way to save money is through to automate your savings. You can save towards your financial goals with different savings accounts. Here at MEFCU, we don't charge for extra savings accounts. We don't have monthly service fees or anything. So there are people that have 5-6 different savings accounts under one membership, and they have it listed as different financial goals that they have. They can have one that goes towards a Disney family trip or a Christmas account or car maintenance accounts or house maintenance accounts. Whatever your financial goals is, I highly recommend you opening different savings accounts. as long as it's a free savings account, that you won't be charged monthly fees on. So just open up different savings accounts and then directly, automatically have your that amount transferred to that savings account with each paycheck directly from your payroll if they're able to, or if not, you can have it deposit directly into your checking account and then disperse it automatically to different savings account as well with each payday. So. And then when it comes to expense tracking, we'll introduce you to different tools and techniques to see which one works best for you. I really like the zero-based budget. That's where you tell every dollar what to do. So in this situation, at the end there, you see that there's $600 left over. That's not a zero-based budget. A zero-based budget would be, with the income that's coming in, the total income of $5,600, I would have, you would tell every dollar where to go. So that way, every dollar has a job to do, and you know exactly where things are going. Some people doesn't really like that because it shows zero at the ends of what's available left over, but you have money, you have a certain amount allocated to different categories in life. So for example, gas for your vehicles, your hobbies, your entertainment, you have an amount allocated to that. And then you have an amount allocated towards your savings and stuff. Sometimes it makes people really nervous to have a zero-based budget. So I think maybe the 50, 30, 20 might work better for them. That's where you would save, that's where you would spend 50% on your living expenses, 30% towards whatever it is you want. So like fun money would be gas, entertainment, going out and stuff, and then 20% towards debt and savings. Some people work really well off of that system, but again, I would like you to save a little bit more versus a lot of times if it's, people go a little overboard if they haven't really addressed the core issue as to why they're spending so much. So allowing that 30% of fun money might be a little too loose for them. And we can start out with a little bit, something more stricter like a zero-based budget. The next thing, it's, old school envelope system. Just have whatever category that you're working with. So for example, with groceries, we're allotting, $800 a month in groceries, so $400 each paycheck. So we just take $400 cash out of that paycheck and put it in an envelope, a physical envelope or, a digital envelope, and then you can just, whatever cash that you have in that envelope is all that you have to spend for groceries or for gas for your vehicle, whatever categories that you're allocating that amount for. So it's just an old school system where you just a regular envelope, put cash in it, whatever amount that you have budgeted for the next 2 weeks or, until your next payday, and then just use whatever's in there. So it works really well for a lot of people too. So we want to review your spending habits, look for patterns, what can be reduced, identify savings opportunities as well. So we'll look over that when we do an audit of your account. Do you really need all these streaming services? Do you really need all these subscriptions and stuff? If your goal is to save money and cut back and try to figure out where your money is going to, the best thing to do is to audit those accounts and try to figure out, why am I paying for 2 gym memberships? When it's summertime and I like to be outside, so maybe I need to cancel that gym membership, or why am I paying $175 for one line with T-Mobile when Verizon is offering something for $75 for one line? So that's something for us to review. Are you paying too much for car insurance? Maybe you need to explore something different, and see if you need to get a second job, if your goal is to save more towards down payment for something else. So when we review your spending habits, we review your expenses and things like that, that would help us adjust your budget too, and help us adjust as to when you should have a due date for your financial goals. So adjusting your budget as members' financial situation changes or unexpected expenses arise, we can work towards making a new plan. So just because you have a budget set up for this month, maybe next month, you pick up a second job, you have extra money coming in, and then we can readjust your budget as well. So a budget is not a restriction, it's more of a freedom to know where all your money is going to. So that's why when you say budget, a lot of people think of, I can't really stick to a budget, I can't do a budget, I can't keep track of the things because I just feel restricted, I feel like I don't have the freedom. It should give you that feeling of the opposite, where you know where everything is going to because you have different categories and you have a certain amount of money allocated to those categories in life, okay? But something I always tell people to have is have an emergency fund planning. How much should you have in your emergency funds? How many months will be good for you and your family? Is it enough to cover this, that, or the other? So how much do you need, and then how soon you're going to reach that? That will be always our first priority to talk about, is if you have an emergency savings. The reason why that's important is because it's going to keep you out of debt. If something happens and there's an emergency, you have the money to cover for it, and you don't have to go, put that on your credit card and put you further into debt. So a key part of budgeting process, I'll help determine how much you should save and how to reach that goal as well. So we'll put that on a spreadsheet. We'll know exactly how much you need to save from each paycheck, and and when you're going to reach that by, because we want to be a little bit more aggressive with your emergency savings, just in case something happens. Then we know that you don't have to, put it on your credit card or try to get a loan. Of course, we have education and financial services. I'll be able to tell you about some of the products that we have available. So I can provide information on various products and services that may help you. If your goal is to save more, then I would refer you to, a high yield savings account or money market account. If your goal is, if you feel like you're emotionally ready to pay off your credit card and your credit is in good standing, then maybe a loan is a good way for you to get a debt consolidation loan to try to pay off, to consolidate all your debt together and pay that off all at once. If your goal is to try to save a little bit more and then to restrict yourself from having access to it, maybe CD certificates might be a good option for you. We have a promotion going on right now. If you go to our website, it'll tell you what the percentage is. You can lock in at 8 months or at 11 months. So that way it can accumulate and grow as you just kind of let it sit there. And so we'll talk about, is money market account better for you? Do you have a certain amount that you have to deposit in, and how much it's going to grow each month? We can look into that as well. And different offers that we have available for our checking accounts. There's of course online banking that we have available. You can do a direct deposit. You can do like mobile deposits. So many different features and opportunities with our services here. So if you're telling me that your goal is to save more money, then I would highly recommend you getting a money market account if you have enough to save to put in each account, or do a savings account, or do a certificate. So we'll explore that as well. And one of the last things that I really want to when I talk to people about is the emotional stress reduction process, or that people feel like so alone when they're in debt. So they feel like they're on an island where they can't really talk to their friends about what they're going through, why they can't go out to dinner, why they can't put their kids in certain sports and stuff where all their friends are able to do that. So it causes a lot of stress to pretty much everyone that I talk to that has debt. So a lot of times when you are feeling like you're in an island, it's harder for you to see a way out because you're emotionally attached to your money. But I'm not emotionally attached to your money, so it'll be easier for me to take a look at your situation and tell you, you know what, I think this is the best option for you. I think this would be the best route for you. And make sure that we go through that journey together instead of you being alone. It's not that, like I mentioned earlier, you're not going to meet with me once if you're going through this kind of journey, like a debt repayment journey, or if you're trying to rebuild your emotional relationship. Your emotional relationship with finances. You're not going to go through it just once. You're not going to go through it alone. So a lot of times people use me as a sounding board to see what should be the next step. Am I doing the right thing with my money? Am I spending too much? Should I need to cut back on this or that? So when it comes to managing stress, just simply talking about it with me or with someone helps out so much, letting you know that you're not alone, because it's not like you go to your group of friends and say, you know what, I'm $100,000 in debt. I feel stressed to be sitting here at dinner that I know that I'm going to put on a credit card that I'm going to stress about later on about by myself. So people then talk to me about, what should they say or how do they approach certain financial situations. So, with challenging times, and it's great to meet with me when you're, feeling financially stressed, or you feel like there's setback, or if you have money anxiety, you're having a difficult time spending the money that you make, or the money that you want to make. Go ahead, Seth, there's a question.
Yeah, we have a question from online from Eliza. Hello, what is the difference between a certificate and a money market account? How much does it cost to meet with you? Yeah.
Oh, yeah, those are really good questions, Eliza. So a certificate or CD, certificate of deposit, so that's what a CD stands for, is where you put a set amount, let's say $5,000. You can do as little as $1,000 at this time. I think that's a promotion we have going on. And then it's in a CD where you can't touch it or for the next 8 months or 11 months, whatever the maturity date is that you agreed to. That's the promotion at that time. I think right now we have it at 8 months. So it's a certain amount that you put in there. You let it sit for the next 8 months, and then it matures, right? So at the end of that 8 months is what it's called mature, and then you can have access to that money. Versus a money market account, I think the minimum is $2,000 to deposit into a money market account, and the rate of return is a little bit higher, or is higher than a regular savings account. You can have access to money market accounts anytime you want. You can even have a regular check that you can write out from a money market account. So if you're the kind of person that knows that you're going to be tempted to spend that money, maybe a CD is better for you because you don't really have access to it. If you do want to cash out your CD before the maturity date, then you're going to get some fees, and you get less money back. But if you know that you have the discipline to keep your money in your money market account, then leave it in there because it's the rate of return is higher than a regular savings account. How much does it cost to meet with me? It's free. It's absolutely free to meet with me. If you're a member with us, you can meet with me as often as our schedules allow. But if you are not a member and you're watching this, you can still reach out to me, and then we can chat to see if there's someone else that I can refer you to, or how you can become a member as well. Was there a different part to that question too that I think I forgot? So if you're a member, it is free. If you're not a member, it's still free to meet with me. Just an initial meeting, but we prefer that you're a member to meet with me. So going back to the emotional support and stress reduction. So if you need emotional support while you're going through, a stressful time, or if you're the kind, there's sometimes if you're going through a divorce and your spouse or your significant other was the one that was taking care of all the finances, and suddenly you're thrust into, having to figure out where you're paying your RPU, how much it is, how do you budget your new income and your expenses and stuff. So if you're used to having a partner, now all of a sudden you don't have a partner to go over those things with, that's where I would come into, where I would just kind of just list things out for you and just be a partner with you along this journey, whether it's just regular budgeting, whether you need some emotional support to get you through whatever situation you're going through financially, or if you really need to figure out your goals and where you want to what you want to reach within whatever time frame that you're trying to reach it by. Behavioral coaching, again, changing habits is hard to do, and I can help you develop healthier ones. The first thing is to recognizing whatever bad habits you have with spending is to really go over, audit all your accounts. Are you eating out way too much, or what is the reason why you're eating out when you said that you want to cut back? Is it because it's easier for you? If it's easier for you to eat out more, maybe it's but you want to cut back and you want to save money. Maybe we should look into referring to different sites that can help you meal prep different food throughout the week to help you save money. If we audit your account and we recognize that you're spending a lot of money on this game, are you using it as an emotional support, you use it as an escape, or what is your reason? Or if you're spending it somewhere like at a casino, is this something that we need to address? Do we need to refer you to a group to help you get out of the gambling situation that you're in? Is that so a lot of times when you're in the middle of your middle of living your own life, you don't recognize some of the habits you have. Are they good habits? Are they bad habits with your money? But auditing your accounts will be able to bring a lot of things into light. So that's where I come into to help you develop different coping mechanisms and help you find healthier ones. And of course, it's a safe space, it's a non-judgmental space when you come into my office or even here at MEFCU. So it's really, really important that when people do see me, it's not always necessarily that they need help with money. It's just that sometimes you just need someone else to talk to about your finances, whether you have a partner or don't have a partner. So with budgeting, with money, it's still such a taboo topic to talk out loud with family and friends sometimes. So when people come see me, it's whatever it is you're spending your money on, how you're spending your money, there's no absolutely zero judgment from me whatsoever. It's just talking through on how to help you get to your financial goals and how to help you get through the current situation that you're in. It's absolutely confidential, of course, when you meet with me, so absolutely safe space where we can offer that safe and welcoming environment for you to talk about some of your financial vulnerabilities, So a lot of times people express a lot of fears into, looking into their finances. I'm too scared to even open my app sometimes because I don't want to know where my money went to. Of course, and if you need additional resources such as family means and things like that, of course, I'll refer you out if it's something that I can't do. If necessary, I might refer you to members to additional resources or services that can help you reach your financial goals. So that's just some of the basics of what I do. I do a lot more, again, more personalized things. It can be a range of things within one day, within, that one meeting even. So if you feel like you need a partner to go through this financial journey through, or if you don't know if you need a partner, but you feel stuck, you don't know where to go from here, I think it'll be a good time for you to reach out to me. Again, this is my phone number, my email address. If you can't write this down now, you can always go to our website, mailcreditunion.org, and my contact information will be on there as well. So do we have any other questions online? Okay, perfect. Well, that concludes our presentation on the benefits of meeting with financial wellness counselor. So if you have any questions, you can email me directly, personally. Just know that you're not alone in this financial journey. So thank you so much for your time today, and I hope everyone has a wonderful day.